In this video, I'm going to be sharing why I'm so bullish on fintech stocks, the exact reason why I'm investing, and then also the exact stocks that I'm choosing. If you guys like this sort of content, just give me a like. But aside from that, let's jump into the presentation. Now, jumping into the presentation, I wanted to make clear that 3 articles were used in the making of this actual presentation, either from QED Investors, Cornerstone Advisors, or Marqeta's in their state of payment reports. All of these research reports were done in either May of June of this year, so extremely prevalent. Now, jumping into our first slide, which was done by QED Investors, it's an extremely high margin business, as you can tell, beating out a lot of these other industries like energy, consumers, pharmaceuticals, and retail. Obviously, financial services, and this is including both banks and fintechs, even though banks have, net margins of upwards of 30%, it's an extremely great industry versus other competitors that are also very popular in the stock market. Not to mention that also whenever you are investing in a high margin business like this, it allows people to actually distribute back to shareholders either through share buybacks or dividends, which is very common amongst the banking industry regardless. So next, I wanted to show off this. The actual peer-to-peer payment apps that are extremely popular. You're looking at PayPal, which is also an owner of Venmo. So both of these companies are actually owned by the same peers. Then Cash App, which is Block Inc., and then a myriad of other players. But I wanted to read this out as well. Peer-to-peer apps are as popular as ever. 3/4 of survey respondents, 75%, shared that they have used a peer-to-peer payment app in the last 12 months. Approximately the same number of consumers that have stated that back in 2022. While peer-to-peer usage was steady year over year, engagement remains meteoric, and those who actually use peer-to-peer apps in the last 12 months saw a huge 92% of people survey share that peer-to-peer app usage has increased or stayed the same. Now, this is actually consistent whenever we look at PayPal and Venmo, for example, including Cash App as well, but we'll share more of that later. But in terms of PayPal, you can see that although their actual accounts have stayed pretty consistent, the average usage per account has continued to climb quarter after quarter. Very, very useful. Now, what are people also looking for whenever it comes to additional services from their peer-to-peer apps? You're looking at debit cards, savings, credits, checking accounts, direct deposits, a whole myriad of different options. Things that Marqeta offers a lot, as well as Galileo Technologies through SoFi, which is a big name for me if people have seen the channel. Now, Galileo is that company that SoFi owns. They offer all of these services except for one. What you can tell is that credit cards, although being the 3rd highest usage through peer-to-peer apps, is something that Galileo just simply doesn't offer. But that doesn't mean that companies aren't acquiring and trying to enter this space at a very high rate. Marqeta just acquired a company called Power Finance. Robinhood just acquired a company called X1. And we're even seeing embedded finance come to the weirdest of companies like Tim Hortons, a Canadian coffee chain that is just getting into credit cards through a company called Neo Financial. It's so clear, either whenever you look at the 41% usage or the fact that all these companies are trying to acquire companies, that this is the next step that Galileo needs to take to stay competitive. It's extremely important. But whenever we actually look at the total addressable market for what's available for, all these fintechs and embedded finance, the majority of people, 81% of people are still using traditional banks. 74% aren't even considered switching yet, and yet the majority, 64%, are still keeping the majority of their money with their primary banks. Now, I'll show that as we go on, that that's changing pretty quickly, but still, it's an important metric that we look at. And also, 53% of people still haven't even switched over their banks ever in their entire lifetime. It shows the stickiness of the banking environment. But let me look at what people are actually doing with their banking. 71% of the people that are using traditional banks are still using computer, tablets, or smartphones to do their banking. They have the ability to actually switch over to fintech. They just don't know it yet. 72% just year over year, from 61 to 72%, don't feel uncomfortable leaving their wallet at home. And only 24% of people feel very inconvenienced from the idea that physical banks would be shut tomorrow. Now, there is a big sort of reason why people are sticking with traditional banks, and that's the idea that they might need cash. A lot of fintechs, including the likes of SoFi and Block and these sorts of players, and PayPal as well, do actually have cash services. They're just less sort of compelling than walking into a bank. No one wants to go to an ATM or a grocery store to go get the cash that they have in their fintechs. It doesn't feel nearly the same. But debit cards, credit cards, and prepaid cards are all offered very conveniently either through virtual cards or physical cards at your local fintechs. Local fintechs. I mean, it's literally everywhere. It's literally never been easier to switch, as you can see, right? From people are saying that the ability to add a new card to a digital wallet went up from 81 to 90% just year over year. How much is that going to climb to the next year? And then the chance that someone automatically adds, their card to their mobile wallet goes from 63 to 75% just year over year. The growth rates in fintech right now are exploding at the highest rates ever. You can just see it across the board. Mobile payments are up. People are confident in leaving their wallets at home. It's a simple process, and the rate at which people are using both traditional banks and digital banking services went from 26 to 37% year over year. The chance somebody will use embedded finance tools either through their retail mobile bank or mobile app or something, or even the likes of Tim Hortons, went from 69 to 76%. This growth is not expecting to slow down at all as cash usage continues to go down, and the embedded finance market is expected to 10x between the times of 2023 to 2032. Unbelievable. Let's go back into why I'm so bullish. The total addressable market here is insane. Whenever looking at global fintech revenues, we can see that right now, not right now, but in 2021, we saw about $245 billion split between banking and insurance that will go to $1.5 trillion, a 6x. And then over on the other side here, even more interesting in my opinion, is the percentage of banking revenues that fintech is going to get into, going from 4% to 13% over this time frame. But yet the actual banking valuations, which means the stocks will actually climb at a higher rate than which the actual growth is climbing, goes from banking valuations from 9% all the way up to 25% of the overall banking market in terms of the stock market will be valued in fintech. That is quite exciting. That leads to a lot of new money that's being made. Now, in terms of which actual different sectors will be the highest performing in fintech, payments is still going to be drastically the largest. Lending will also be super large. Insurance, deposits, investments, and financial infrastructure are still in the game and still growing at immense levels. So whenever I think of payments, I think of PayPal. I think of Cash App. I think of Galileo through SoFi. Lending, SoFi. Insurance, Lemonade. Deposits, SoFi. Investments, you're looking at Robinhood, SoFi, Cash App, those sorts of things. And financial infrastructure, SoFi. Okay, so there's a lot of SoFi overlap. They kind of play in every single realm. And that's exactly why they're my biggest pick out of the fintech ranges. But also, I'd like to bring up the actual, regions here. North America is still going to be growing by 4x till 2030 in their revenues, going to 520 billion. But there's a market here that really stands out to me. And no, it's not Africa for being the 13x. It's just a little bit behind that at 12.5x at Latin America. Because if we actually look at the total amount of billions here, 65 billion to 125 billion, I'd rather take the little bit less of a multiple, but for a much, much larger market. And what really stands out to me, guys, is Nubank. Okay, Nubank is the stock that I love to pick whenever talking about Latin America. Not only that, they do actually have plans to expand both into North America and Africa. So they do want to take on that growth that QED is sort of illuminating here. Now, whenever we actually look at the reason why people are switching at such high rates, well, it's the customer experience, right? US banking averages go from 23 points in terms of NPS scores, which means net promoter score. It's the ranking that customers, sort of put on their banks, sort of like a 5-star rating, except just a little bit more in depth. Those surveys that you sort of get after, uninstalling or sort of getting into these apps. So US fintech averages, however, are more like 83%, where you can actually see that SoFi hangs out on the larger end there at 90 NPS scores, beating out all the other competition, which is exactly why I love them as well. They're in all the niches, and people are also loving them the most. Now, in terms of, part of the articles that was done by Cornerstone Advisors, they are showing the bank account openings by the different style of banks. So whether it's mega banks, regionals, communities, credit unions, or digital bank and fintechs, well, the trend is so clear here, guys. Between 2020 to 2023, people are leaving mega banks like a mass exodus and going towards fintech. Yes, there is a little bit of growth here in communities, but going from 5 to 6% is not nearly as crazy as going from 36 to 47%. There's such a clear total addressable market, and it's showing that the community wants to be in these new digital banks and fintechs as they are more customer focused, as we saw in the NPS scores as well. The amount of people that actually consider themselves using a primary checking account provider through the mega banks has been decreasing. This is between 2020 to 2023. You can see that Gen Z, millennials, Gen X, and baby boomers all are leaving, okay? Even in the baby boomers, although slower, they still are changing out of those mega banks as they can actually find new options in the fintechs and other different options like, community banks, for example, that might offer a better service, right? And then whenever we actually look at the percentages in which they're growing in fintech, this is just insane. The high growth rates you wouldn't really expect in Gen X and baby boomers is much higher than people expected. Although going from 4% to 11%, that's a 175% increase for baby boomers. And those are the people with all the money. Even Gen Z, which should be expected, being some of the highest rates, going all the way up to 36% of the new fintechs. Remember, this is the future generation. So as these people are, although still switching, this is, the generation where people are sort of passing away. They're not the future generation. And so as time continues on, there will be less baby boomers and more Gen Z and more of the next generation as well, which should have this upper end of the curve as well. So that sort of trend will continue going forward. And that's where I want to invest. I want to invest in the areas that are continuously growing, not dying, right? I would not want to be in a mega bank right now. Now, whenever QED was breaking this down, they actually spoke to a bunch of fintech CEOs and said that customer acquisition was their biggest challenge. Now, I've spoken about all the different sectors of banking. I spoke about all the different regions, and you can pick and choose which stocks you want to pick based on this large total addressable market, based on region or sector or anything like this. But then there's also different types of fintechs within those regions. There's companies, for example, like Nubank and Cash App, that have discovered an amazing way to acquire customers, right? For Nubank, it's anywhere between $2 to $6.50. Like they said, it's $6.50 because of some form of cost to serve, but really they're only spending $2 in paid marketing. Cash App does about $10. It's insane, right? Other neobanks can sit somewhere around $30 to $50, but this is not necessarily the same for SoFi. SoFi is a much higher average revenue per customer type of bank. And so they want to acquire the perfect type of client to get into that lending first style strategy. How high? Well, about $350 per user, give or take, another $50. So there's been times where they've acquired people for as high as $1,000 to get them in for a medical student loan, for example, but then that person is going to have an extremely high average revenue per user. So it depends on what you guys are looking for. If you're looking for a company that can sort of go out and get 100 million customers, you're looking at Nubank and Cash App. If you're looking at a company that goes after the top-notch clients, you're looking at something more like SoFi. Just to break it down even further, okay, what you're actually looking at is between, 12-month optimism. Payments, obviously, seem to be the most optimistic, still not very excited. And then in Latin America, it seems to be, the best so far. If you're talking about North American, people are pretty not optimistic at all for, fintechs. And then there's certain areas within that, like neobanking and stuff like this, that are getting extremely hit hard across the board. 3-year optimism, however, payments turns into this gold mine. Latin America turns into this gold mine. And then even other things like infrastructure in North America is expected to boom. That's where I look at SoFi through Galileo as well. So there's a bunch of massive growth opportunities here in fintech. It's just a matter of what you guys think is a potential good opportunity for your portfolio. What I've actually chosen for my portfolio, however, is PayPal, Nubank, SoFi, and Cash App. I'm going with a mix of these big four players, as I believe that payments, neobanking, and lending are the biggest opportunities. And then obviously Latin America is a big opportunity for me. And like I said, the infrastructure play that SoFi also has as well. Guys, that is my presentation. I hope you guys liked it. This is the exact reason why I'm going all in on fintech. It's a massive total addressable market. There's a lot of players that are gaining a ton of, new clients, and the actual amount of people that are still with traditional banks, like 81%. So this, massive opportunity is not going anywhere. And even across the board, not even in fintech, okay? The total amount of people that are still being able to get captured and monetized is still expected to grow. Did you guys know that 75% of the world is still underbanked? So as we continue to go and banking becomes more global and payments become more global as well, companies like PayPal should thrive and grow still, even though some people still continue to think that, they're the dinosaurs of the industry. Thank you so much for watching. I appreciate your time. Like the video if you can, and subscribe down below if you want to see more content just like this. Bye for now.